we got some good news. Crypto is getting a lot of adoption, as seen by the increasing number of wallets in crypto, but not just any wallets, wallets with positive balances. Bunch of wallets with zero balances does not mean anything because they're not using the wallet, but positive balances, that's what we're looking for. So a lot of wallets, positive balances. But there is a catch to this, and it's not a catch that we actually like. So there's over 400 million crypto wallets that have a non-zero balance now. And this is from Chain Analysis. Real-world tokenized assets and investment vehicles continue to be the major drivers of crypto adoption. That does mean that's as expected, tokenization of assets, and also basically crypto for investment, which means like crypto for payments and stuff. Still not very big. I just don't think people are all that interested in that, including the big institutions. So over 400 million crypto wallets have positive balances as the bull market continues to heat up, according to Chain Analysis. The current rally is attracting institutional and retail users to crypto, particularly those transacting in dollar-pegged stablecoins. According to a December 5th report, the rise in wallets with a non-zero balance represents a clear trend that crypto adoption is steadily increasing, despite wallet addresses not necessarily indicating the number of people using a blockchain. Obviously, people can have multiple wallets. We've already established that. It's clear that we're experiencing a seismic shift in both perception and usage. Now, I don't really know if I agree with that, but there is a caveat to all this adoption. They talk about like convergence and an increased adoption during this market cycle, and people are using crypto some more. But the caveat is the on-chain transaction activity is dominated by stablecoins, whether that's using DeFi or using actual real-life utility like payments and stuff. It's all dominated by stablecoins, cross-border transfers, collateralization and all that stuff. And it's exactly what I've been saying all this time, that like the real utility use case for a lot of like industry utility is going to be stable coins because they're stable in price. It makes sense for companies that use them, whether they're doing it for money issuance, money transfer, or even like some tokenization, collateralization, because it's just much safer than using cryptos to do it. According to the report, stablecoins represented between 50 and 75% of all on-chain transactions since 2024, and I do think they account for a large portion of all crypto transactions. Stablecoins are typically thought of as fiat on-ramps and off-ramps for crypto, like USDT, USDC. However, a previous report from Chain Analysis revealed that stablecoins are quickly growing as a store of value among individuals in emerging economies. Now, emerging economies, they have trouble getting USD, so obviously getting USDT, USDC is the next best thing, because if it's really backed one-to-one, they can redeem those for USD or sell them on the crypto market for USD. It can definitely be a lifeline for them to have a stable currency. You don't like the Argentinian peso? Good. You can get USDT or USDC and have that be a store of value. So USDT and USDC are actually becoming more stores of value across the world than Bitcoin and other crypto. We might not like that because we want Bitcoin and other crypto to get adoption, but in terms of like an actual utility, these stable coins might actually have way more utility to up and coming countries with an unstable fiat than crypto. Because remember, even if Bitcoin is more stable and it does continue to go up over time, if you actually are in like the mindset of like, hey, I want to store it for like just a couple of weeks, then use it, Bitcoin might not be the best answer because, in those couple of weeks, it could lose 30, 40% of its value, whereas the US dollar within a couple of weeks isn't really going to go anywhere. So in terms of like a salary that you need to use, storing it in USDT and USDC is a very good idea. And I think like across the developing world, you'll actually see US dollar come into more and more dominance via these stablecoins. So all these things about BRICS and like how the dollar going down, no, crypto is actually going to maximize the dominance of the dollar because it gives a digital way for anyone anywhere in the world to buy a representation of USD. And trust me, USD is the one they want. They might want some euros or something like that as well because those are fairly stable compared to their currency. But USD is the gold standard. And I think like crypto, like digital crypto is going to make stablecoins, USD stablecoins, the de facto stablecoin of the world because it's going to basically like collateralize essentially all those developing countries into USD. For instance, in Venezuela and much of Latin America, US dollar stablecoins are increasingly used for remittances and access to liquidity in jurisdictions without access to the currency or have tight capital controls. So yes, we're talking about cross-border transfer remittance across borders. They're not interested in using like BTC, XRP, Solana, whatever. They're interested in USDC and USDT, and that's what they're comfortable with. So that's why I say like USDC, USDT is going to dominate that market. It's because it's increasingly what more and more people are actually using. If you look at like the stable coins, the share of all transaction volume, it's remained stable, but it is actually going up. You see this graph. The big gray area is stablecoins. As you can see, it was fairly small in 2021. It's expanding in 2022. And in 2023 and 2024, it's only expanded a little bit, but it's more than 75% of the, it's more than, 50% of the use case. And I do think it's going to keep on growing because actual real world utility is going to be dependent heavily on stablecoins. So people are getting more used to the digital kind of like universe, especially like in the bear market in 2022. I think like 70% of all transactions were stablecoins. Now it's like come back down to around 60% because people are actually buying Bitcoin during the bull market once again for investment value. So like I said, whether you have Bitcoin, XRP, ADA or anything like that, it's going to be primarily bought as an investment vehicle to make more money, whereas stablecoins, day-to-day utility, that's what's going to dominate. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button, and I will see you guys later.